Welcome back to The Disciplined Trader, the podcast where strategy meets self-mastery in trading, brought to you by bellsforex.com AudioWorks. I'm Isabel Maria, and today, we're diving into a topic that's at the very core of trading success: developing a disciplined mindset. If you've been following the podcast, you know that knowledge of charts, indicators, and strategies is important, but what really separates consistent traders from the rest is their ability to manage themselves, their emotions, and their decisions under pressure. Trading in financial markets can be highly rewarding, but it's also one of the most psychologically challenging professions out there. Even if you've mastered technical analysis or nailed down a solid strategy, without discipline, all that knowledge can go to waste. Today, we're going to explore why discipline matters, how you can cultivate it, and I'll share a real-world example of a trader who turned his performance around by mastering his mindset. So, why is discipline so crucial? Let's start with emotional control. Every trader, from beginner to professional, faces moments of panic, fear, or even greed. It's those split-second impulses, selling too early during a dip, chasing a loss, or entering a trade without proper analysis, that can wipe out months of hard-earned gains. A disciplined trader recognizes these emotional traps and takes deliberate steps to manage them. It's not about suppressing emotions entirely, it's about not letting them dictate your trades. Next, consistency. Trading success isn't about hitting one big winner, it's about steady, reliable performance over time. Discipline ensures that you stick to your trading plan, follow your rules, and avoid erratic decisions that can derail your progress. It's also tied closely to risk management. When you're disciplined, you're less likely to take unnecessary risks or exceed your risk tolerance. You protect your capital, you survive drawdowns, and you build long-term sustainability. And speaking of long-term, that brings me to perhaps the most important point: short-term wins might feel thrilling, but they can be misleading. True trading success comes from steady, incremental growth. A disciplined mindset prioritizes consistent gains over gambling for quick returns. That's how you achieve sustainability in your trading journey. So, how do you develop this discipline? Well, it starts with creating a robust trading plan. A plan is more than a list of rules, it's your blueprint for navigating the markets with purpose. Define your entry and exit points, set stop-loss levels, establish your risk tolerance, and clarify your trading goals. But the key is not just having the plan, it's following it, even when the market is volatile or your emotions are running high. Discipline is what keeps you aligned with your plan, instead of letting fear or greed take over. Patience is another cornerstone. Trading can feel like a constant rush, but the best trades come when you wait for high-probability setups that match your strategy. Impulsive trades are often driven by FOMO, and that's a quick route to losses. Practicing patience ensures that when you do act, it's deliberate and calculated. Risk management is inseparable from discipline. Decide ahead of time how much you're willing to risk on each trade, use stop-loss orders strategically, and make sure your reward potential outweighs the risk. A simple 1 to 2% rule per trade and maintaining a healthy risk-reward ratio can prevent catastrophic losses and protect your capital. Maintaining a trading journal is another powerful tool. Record every trade, every decision, and even your emotional state at the time. Over time, this allows you to spot patterns in your behavior, where you let emotions creep in, where you deviated from the plan, and how you can improve. Reflection turns mistakes into lessons, and lessons into lasting discipline. Emotional control ties all these elements together. Techniques like mindfulness, meditation, or simply taking breaks when the market gets stressful can help you remain calm and rational. The goal is to approach each trade with clarity, not with the chaos of unchecked emotions. Automation can also support discipline. Using algorithmic systems or predefined rules for trade execution removes the temptation to act impulsively. When the market moves fast, having a system that adheres to your plan ensures that your trades are consistent and rational. Let me bring this all to life with a case study. Meet John, a junior trader who began his trading journey with a solid understanding of technical analysis. He started trading stocks, identifying patterns, and initially saw some success. But then market volatility hit, and John's discipline was tested. After a series of losses, he impulsively entered trades without proper analysis and skipped stop losses, trying to recover quickly. The result? Significant capital loss and a spiral of frustration that led him to overtrade and compound his losses. Recognizing that he was letting emotions drive his decisions, John made a pivotal shift. He created a structured trading plan, defined clear entry and exit points, set strict stop-loss limits, and capped the amount of capital risked per trade. He also began keeping a detailed trading journal, tracking his trades, emotions, and strategies. Over time, he learned to follow his plan consistently, avoid emotional trades, and reflect on past mistakes. He practiced mindfulness to stay calm during market swings. The result? John transformed from a reactive, frustrated trader into a disciplined, consistent one, steadily growing his capital and improving his performance. John's journey illustrates that developing discipline is not a one-time task, it's a continuous process of planning, reflection, emotional management, and patience. It's about building habits that allow you to trade strategically, not impulsively. And while the path isn't always easy, the payoff is a trading career that's both sustainable and successful. Now, here's a question for you, our listeners. Think about your own trading experiences. What's the one habit or emotional pattern that you know sabotages your results, and how are you planning to address it? Share your thoughts in the comments below. Let's start a conversation and help each other grow as disciplined traders. Thank you for listening to The Disciplined Trader, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!